if I wanted a laundromat, I'd do one of two things. I'd find the smart guy that bought the building that has the apartment on top and the laundromat on the bottom, or I'd buy the strip mall. I'd buy the damn strip mall. And it's because I'm house hacking the crap out of that strip mall.
Mm-hmm.
The
Mm-hmm.
gain is the strip mall.
Yeah.
The active coin is the laundromat.
I've got dreams, I've got dreams, I've got dreams to find a way out. I've got dreams, I've got
All
dreams.
right, Daniela, welcome to the show.
Thanks so much for having me. I'm so thrilled to be here and to rap all about real estate and business.
Oh, I can't wait to dive into this because, as you know, I'm the residential guy. I built my portfolio on single family homes, and like some say I hit a home run, but commercial real estate is a completely different animal that I've kind of been afraid of.
Hmm.
And I know there's more stability there if you do it right. And I also know that if you have a business and you own the real estate your business is operating in, it's kind of like it's the holy grail. So I really am excited to get into this. But let's start with you.
Sure.
Tell me about your story, how you even got into real estate and commercial, and give me the whole rundown.
All right, let's do it. I'm born and raised in the Bay Area, and I live in Pacifica, California, a tiny little coastal town on the Pacific coast. And I'm a mom of three little ones. So I've got a 1.5 year old, a 6 year old, and a 7 year old. And a couple years ago, I grew up as a third gen entrepreneur. So my family has been in flooring in San Francisco since the 1960s. It is sounds cool when you say it like that, but the reality is like grandma and dad worked in dusty, nasty warehouses my entire life. And like that's what I carpet. Like that's not sexy, right? And
No.
so um I knew how to do big girl stuff. I had big fancy job titles. I was the first in my family to graduate from college or to go to college and get a master's degree. That's all my dad wanted for me, never to work in the warehouse. Um, but I graduated in 2008, and all of those jobs were not there, Keith. They were like
Yeah.
not there. And so
Yeah.
my grandma was getting ready to retire after founding the company. And my dad's like, I got a job. And I'm like, cool. Okay, let's go do this. And at that time, tech was booming in San Francisco. So I actually at the time joined a real estate mentorship and like totally bought into one of those overpriced things. But what I learned was how to do creative finance. And I started a nationwide transaction management company where I transacted over 300 creative, subject to seller finance, lease option, you name it, in all 50 states, legally with attorneys, attorney teams. And I learned how to leverage real estate creatively. And that was when I got into residential. And I got into residential and I lost my butt. I lost 70 grand on a townhome, a literal townhome. It
Is
was
in this where was it?
Bend in Bend.
Oregon?
Yes, yes. And this is why.
Did you know anyone in Bend, or you just
No,
it
that
was a
was
good
a
price?
I like made this was it. So I was a part of this creative community, right? And I got this deal. It was a subject to, so means right, subject to the
Hmm.
existing mortgage. It was a real estate agent that owned it. He was sick of managing it. I now know why. And it was brand new, beautifully designed. I think it went for like 600 grand in a really nice area of Bend at a 3% rate when rates were 8. So I was like, cool. How can this be a loss? I'm a Bay Area
Yeah.
girl. Like, I can't afford 200 grand out of pocket to buy something like that. No way. And plus, I was able to walk in with 8% down. And so it was a total creative structure. I was stoked. I was like, okay, I have to midterm rent this thing. It can't be short term rented because of the CCNRs. Um, and like, oh, poor me, I'll have to go to Bend. Like, it'll be empty, and I'll have to go to Bend. Wham, right? What a come up until it wasn't. So that thing, even at 3%, was like around a $3,200 a month mortgage. and you had to have pay for all the utilities, right? Because it's midterm, got to keep everything on.
Mm-hmm. Mm-hmm.
And I was coming out of pocket after everything, probably closer to like 4 grand a month. And I couldn't rent it to save my life. And I find out that next door is a sober living facility for juvenile delinquents that just got out of jail. So I call the realtor back and I go, so this is the thing. I've got the leverage here because mortgage is still in your name. And you left out a material fact. Should have told me about that house. So what's going to happen is I'm going to pay the mortgage one more time. You're going to get a letter from my attorney. I'm going to deed in lieu it back to you. We're going to wash our hands. We're going to walk away. Call it even. And he said, thank you so much for your professionalism. And that is when I was done with residential. I'm like, okay, if I'm going to get into a place where I could lose that much money, it better be for the gain of a lifetime. It better be because of a multi-family situation where the interest rates jumped on a variable loan. It's got to be something worth more than what I
Yeah.
did, you
Yeah.
know? So it was wild, but it led me directly into what you've kind of clearly done is I became a commercial broker because I was like, okay, no more residential, but I don't understand commercial. So how do I hedge against that risk? Because God forbid I ever make another stupid mistake like I did before.
Mm-hmm.
And I got really deep into just like market analysis because commercial is all about data, right? And it's all out there. All of the big firms, they publish quarterly reports on every single submarket, every single asset class. So you can see how per square foot prices are increasing, what's happening, what's coming, what's going. And I became married to it. You know, like I completely walked away from all the creative crap, walked away from my TC company, exited that successfully. And I realized something super important. Everybody wants what you're doing right now. Everybody. I've got my 10 to 20 homes, whatever, let's call it 20 million net worth. I'm making enough on cash flow to survive. I don't have to work, even though you're working all the time, probably.
Yeah. Yeah. Yeah.
But it's different.
Yeah.
Everybody wants that part. But you know better than anybody, the road from here to here, even in a crazy great buying market, is like this,
Oh yeah. Oh
right?
yeah. Yeah.
So for me, you know, going into commercial, it just felt like I really have to know what I'm doing here. I have to be able to represent other people and figure out what other investors are looking for, what makes a great deal for them, what doesn't make a great deal for them, different
Yeah.
asset classes. Um, and what I really realized was I needed an active income machine. There was never going to be one commercial. I mean, this happens, don't get me wrong, but there was never going to be one commercial property that was going to make or break my life. It's a process. It's just like houses. You know,
Mm-hmm.
commercial, if you're working as a commercial investor, you are you're trading your paper and your properties every 5 to 7 years, right? You burr it. You buy, but you don't
You
just get
increase the rents, you increase the value. Yeah.
Yes, you get in there, you stabilize the tenants. So once you
Yeah.
get in there and you do the work, you can retrade it, right? You capture
At
that
that new
gain.
value.
Yeah,
Yeah.
and that new value is like 500 grand, 700 grand, a million, 3 million. Like you start to play with bigger numbers so that all of a sudden you went from buying a strip mall that's 1.5 million with 4 tenants to buying something for 12 where you've got a grocery anchor, you know, and
Mm-hmm.
like
Mm-hmm.
same thing with multifamily, right? You go from like a
Yeah.
eightplex to freaking 24 units. You can do this across any asset class in commercial because commercial properties value is not in your ability to come in with money. It's in the
Mm-hmm.
tenant that you bring or the tenant
Yeah.
that it has. So I mean, we'll get there, but in like my little end cap to that is like when you own a business that's producing all that active cash that you have to depreciate or you're going to pay Uncle Sam arm, a leg, and a liver. Um,
Mm-hmm.
you can buy a building and go to the bank and go, Here's my 10-year committed lease. I'm bringing a tenant in tow.
But in this case, you're saying you are the tenant.
Mm-hmm. Yeah, because I own a business.
Yeah.
So if I got to a point with one of my, I'm talking about one business specifically that I'm still leasing with, and this goes into so many other things. Like I've got private money on this. I know I'm going to have to refi out of my situation. When you own a business without real estate, you are super limited to
Hmm.
your loan product. It's
Hmm.
SBA or it's private capital, right?
Yes. Yes.
Unless you buy the freaking facility. Then your loan products go like this and you have options because the bank goes, ooh, you have a hard asset we can take from you if everything goes south.
Yeah.
So if it's an established business, which is really what I've gotten into, is buying businesses from boomers. That's what I do. Um, I'm looking at a established, like the bank is not going, oh, well, this is a startup. There's no stability here. I'm like, no, no, no. This has been in this submarket for 40 years. I can pull 40 years of consistent tax returns. This isn't just me saying I'm a special tenant. No, this is a real tenant and a obligation from this business that's performed historically for 40 plus years to pay your mortgage. If I sell the business, doesn't matter. The business is still leasing my building.
Yeah. Yeah.
You
Yeah.
will take
No,
it
it's the McDonald's approach, honestly, right?
for sure. For
Yeah.
sure. So
So, real quick, I just have a question. So, are you finding the business first and then finding the real estate you could put that business in? Is that
great question. Typically, when I look at businesses now, I try to find something with real estate. I try,
okay?
like, and this is where it gets kind of nuanced, right? Because I mean, we all want something technologically that's, and what technologically is probably not the right word, but that's like technically palatable. And this is what I mean. If you've never been an electrician, it would be tough for you to go buy an electrical company. And I think that this is something that all those influencers gloss over because one, they got lucky. Maybe they found a good operating partner in the field. Like they thought about the structure different. They did
Yeah.
this for a reason. For me to step into an electrical company and QC work, drill down on the margin, make sure the men's production hour were acceptable hours and they weren't leeching on the job or whatever it is. Like it'd be super hard. I don't know, Jack, you know what about freaking electrical, right?
Yeah. Yeah.
So that's why Cody Sanchez and her boring businesses are so much sexier because you can go buy a self storage facility, you'll be fine. I could go buy a laundromat tomorrow, I'll be fine. Car wash, you can find a car wash technician in the area that's good, you'll be solid, right? And the people that you put into those businesses to help you run them, it's not a high education position, right? Like if
Hmm.
you had to show up and sit at the desk, you could no problem, but so could most people. Um, but yeah, I mean, if I wanted a laundromat, I'd do one of two things. I'd find the smart guy that bought the building that has the apartment on top and the laundromat on the bottom, or I'd buy the strip mall. I'd buy the damn strip mall. And it's because I'm house hacking the crap out of that strip mall.
Hmm.
The
Hmm.
gain is the strip mall. The
Yeah.
active coin is the laundromat,
Yeah.
right? So
Yeah.
for whatever reason, parking, need a regrade, security, need new cameras, HVAC, and for one of my tenants has to be replaced. I take it out of the laundromat money. I don't take it out of my money, right? And so that's sort of it took me
Mm.
getting literally clobbered to figure out I'm trying to be somebody that I'm not. I'm not Pace Morby. I don't own
Yeah.
8,000 units. So
Yeah.
I have to play different and I have to securitize myself differently.
So really, it's about finding that business, that solid business that's already housed in real estate. That's a good deal versus somebody that's just like, hey, I want to buy a strip mall, but you're just buying it with whatever tenants are in there, and then you're having to put in new tenants, make renovations, whatever. You're targeting the business first, right? That's in
I'm
the right building.
I'm looking at the businesses first and foremost because it's the same thing as real estate, right? Like when you start underwriting real estate, is it going to work? If the business isn't profitable, right? Like if the structure's not there, if it's not a stabilized business, nothing matters, because then I've got
Yeah.
two problems. I've
Yeah.
got this business is a huge problem, and I've got, my strip mall's not really stabilized because I have one tenant that's me that's not stabilized. That's risky, right?
Yeah.
And
Yeah.
so it takes a while. Like it's just like you said, with you've been doing, how many years were you really into real estate before you started to be able to napkin underwrite with confidence?
Mm, about 3 or 4 years.
Okay.
Yeah.
Same thing with businesses, right? Where it's like I can go in, and especially now because I've bought a few and I've bought stabilized, I've bought the fix and flip business, which has been a nightmare, but has the most gain. Like I've done a couple different things now. So now I can kind of go in and look. And when you see me analyze a biz by sell, a business listing by a broker or any other of the websites, I sound so negative. I'm like, yeah, sure. Like I'm
Yeah.
looking down all these
Yeah.
things because I'm like, bro, like let's talk about it, because I can guarantee you 70% of the things you just said are literally not true, which you wouldn't know, business broker, because you never operated a business.
Hmm.
So it's the same thing as what you're doing right now.
Well,
Same thing.
that's the same thing. Like I had this conversation the other day. Even in the residential side, there are far more realtors out here than homes for sale. For one, two, half the realtors don't even own the house they live in, and I'd say the majority of them have never owned a rental property.
A license doesn't mean anything. A
Doesn't mean
license,
anything.
it means you have way more rules that you have to follow. That's what it
Yeah.
means. It means you have to
Yeah.
stay within compliance. That's what it means. And those rules exist for a reason. I'm not against them by any means. I'm all for doing things compliantly with integrity and honesty and all that jazz. But when I get in front of a realtor or a commercial broker that's hard selling, that has never owned an asset or had to manage that asset, all
Yeah.
respect is out the door. I'm
Yeah.
just like, no. And I have to find a really gentle way sometimes of telling my clients that I can relate to you. I can relate to you on both fronts. I can relate to you as an asset manager. I can relate to you as a business owner. And like that, I think that's like the gray area. And the hardest part for me is sometimes knowing, when you're an investor, you're trying to poke so many holes in it, right? Because you're trying to lower your risk or rather, you're trying to feel good about your risk tolerance and
Hmm.
the deal. And you know what you know. Nobody can take it away from you. But for me, sometimes I listen to what my investors want, and I know that the fear, which I'm very familiar with, is holding them back. And so I get to a point sometimes as a commercial broker where I go, "Hey, you asked me for A, B, C, and D. I brought it to you. Now it's your job to perform, or I just wasted the last 7 months of time with you." So there's like this gray part of going, I know how you feel truly. And if you work with me, I expect you to know what you want, because I'm not here to go shop. Like, this isn't funsies. Like, let's go to the mall and hang out. Like, I'm here to, like, my time is worth something. And that's where it gets tough, because you have to sort of face the feelings you already feel yourself about everything you buy and everything you do. Um, but yeah, I work with a couple people in commercial real estate. It's not a couple, like industry wide. Like brokers are kind of known for being awful, and not that many of them have experience owning.
Yeah. Yeah. I'd say hardly any of them do.
And that's where they're honestly, the folks that do, they make the move. They stop listing. They stop listing and they make the move into asset management, because
Yeah.
it's not that it's easier. It's just different.
Yeah.
It's different. So,
Yeah. Well, let's go back a little bit because your family business,
yes.
I want to know did you said that they owned this flooring business since the 1960s, right?
Mhm.
Did they own the building?
Oh god, this is so good. So, my family in the 60s, right? Think of like grandpa's like an Egyptian immigrant. Okay.
Okay.
Super smart guy, but like hustler. Grandma is the eldest of, I think, 10 from Mississippi. And so they met in San Francisco. And my grandfather was always trying different businesses. As you can imagine, most immigrants go through this, right?
Hmm.
And they figured out the flooring thing. They figured out that this was a thing that people needed that wasn't going to change too quickly because he invested in laundromats early on, right before a massive change and lost everything. And so a massive change in the technology of the machines. And so flooring worked, and they made no money for a very long time. And they were always at risk of losing their lease. So, as this sort of iterated into the business that my grandma and my dad really ran together from 1981 on, after my grandfather and grandmother split, um, this remained to be true. And I'll tell you why. I didn't know this until I went to go work for other businesses, and I did some fractional COO work because I was always just like, God, why is this business so hard? Like, why? And it's because when you work in a silo, you don't know what any of your competitors are doing. You don't know how to progress. You don't know how to grow. You don't know what you should push on. Like, executive coaches weren't a thing back then, you know?
Yeah.
They sold mentorships for sales. That's what they did. And sometimes those worked, and sometimes they didn't. And so they spun their wheels for a very long time. And they just sort of agreed that we don't really have this business to scale and make it rich. We have this business because it's our job, our way. And they were comfortable with that. My dad did not want to manage people, so he never could grow. And so it was this limiting, self-limiting thing. And because of that, they could never get ahead enough to buy a building. So I kind of grew up knowing, like, I could hear my dad. My dad was very open about finances and money. Whether that was an advantage or a disadvantage, I don't know. But I grew up with a lot of stress for him because he was always at risk of being booted. Always. Like, it was like, if we get booted, it's not like a shoe store. It's like we've got 50 rolls of freaking carpet in here,
Yeah,
right?
yeah,
Like,
yeah.
a nightmare. Um, and right before the recession started, my grandmother, she's like in her 80s at this point. I was just about to replace her. And she's looking through the San Francisco Chronicle every day. And she finds a listing for an auction for a building that City College was auctioning off. And she goes, I mean, they had been looking for a building for years. And their financial person was like, can't do it, dude. You can't afford it.
Yeah.
So my dad showed up to this auction, and he was the only one there. And he got a 16,000 foot flex industrial facility in a good part of San Francisco for like 2 mil, and now it's worth 7.
Wow.
So he spent the next 7 years after moving to that facility working his you know what off, so fearful that, like, God forbid anything happened, because he had to beg, borrow, and steal to get into that, Keith. They
Yeah, I
leveraged
bet.
everything. They leveraged
Yeah.
everything. The money in the freezer, under the freaking mattress, every dollar of equity they had. Like, they borrowed money from people, like anything they could. And then the recession hit literally a year later. So he was just so afraid. He was
Yeah.
so afraid that he was going to lose it, and everybody was going to suffer that outcome, that he worked straight for 7 years and paid off the entire building. So when I bought the business from him, I leased from him, from my family's trust. So
Okay.
I know I have lease security, but me, Daniela Devine, is not benefiting off the ownership of that building. So knowing what I know now, when I do a bolt on to this business and I go buy another flooring business, I'm going to buy it with real estate. Whether I have to find it separately from the business owner or not, because now I understand that loan products are going to be so much more advantageous for me if I purchase with a building. Like, my business, my dad and his sacrifice, which he deserves, is benefiting off of the lease and the lease structure with the business, which I'm also his broker. So it's like I'm like, I made sure the lease was good for me, but I also made sure the lease protected him, right? Because if
Yeah.
I sell the business and it's
Yeah.
somebody else, I got to make sure it's tight and right. And so, for both sides. So yeah, it's sort of a trip how that all happened, but he eventually did. And when he bought that building, it completely changed his ability to scale and serve his submarket. He anchored his business in the submarket. I mean, 16,000 square foot facility is not small change for inside the city of San Francisco. And so
No, not at all.
he was able to do so many things because he got that building.
Is he subleasing any parts
Mm-hmm.
of it, or is it? Yeah. Okay.
Yeah, yeah. And
Okay.
now, like, I absorbed about 10,000 square feet, but even now, like, I'm reevaluating my business and going, I don't really need all this space. Like, I might be subleasing a couple thousand square feet too, because, like, this though, it's this right here. This piece is the flexibility play. I can house hack my way into
Yeah.
being in
Yeah.
a
Yeah.
building that I know I'm going to inherit, hopefully,
Yeah.
but even if I didn't, being a commercial broker and understanding leasing, I made sure I had that caveat. I didn't get to nail myself to 10,000 square feet. But the better play, if this wasn't my family's business, would have been to do that, buy the business with the real estate. If you find a killer business and it doesn't have real estate, it's okay. Just do your best to find something to affix it to, because I
Mm-hmm.
kid you not, to the bank, the power of that stabilized tenant, whether it's you or somebody else, is literally your ticket to an approval. That's all they want.
Let's talk about that, because on the commercial side of thing, if we are going with the traditional bank, you are, unless you're going through the SBA or something like that, you're putting 25% down, right?
You're putting a chunk. Yeah.
Yeah.
So this is my way around this. And I really, this is why, like, this kind of transaction is multi-pronged. It takes, like, if I found a business today that I wanted to buy, I'd bake in a year and a half. I'd bake in a year and a half to get everything in a row, like everything, right? From people change management, loans, raising private capital. So there's a couple influencers out there that talk about buying businesses and, oh, you just find an equity investor and it's so great and they bring your down payment. And at first I thought that that was total baloney. I was like, okay, like, who am I going to find just roll up and do this, right?
Yeah.
Until I owned a couple businesses and I started spending a significant more time with people that also owned high level businesses, put it not through mentorship, through some executive. Like, I found the executive coach for me, like the guy that manages people like me, that has direct lines and connections to private equity, to private investors, because I knew, like, one, you're going to help me get where I need to go and understand my options. Like, that's what I needed. I
Yeah.
needed access to options. And so after working with this person for a couple months, they don't do the work for me by any means. It's kind of like, hey, we'll tee you up, and that person over there might go figure it out, right? But what I now know is that it is worth giving away 10, 15%, 20% of your business to have an experienced partner with money to move come in. This
Yeah.
partner does not have to have voting rights. This partner doesn't have to be an active part of the business. You can very granularly in your operating agreement or in your shareholder agreement define their obligation, 5 hours a week of consulting, whatever it is. This person, trust me when I say, you will benefit from this person. CFO, fractional CFOs do this all day long, right? HR, change management executives that understand what it's like to have to transition a business, people in private equity that know the red flags that you are not going to know until you deal with them yourself. So to me, it's worth the time and building the bricks to find that person that can do this with you. And yes, another way to do it, and this is not available to everybody, but I was able to scratch my way into an SBA loan like this. I took all of my sleepy 401ks and retirement money, and I was like, thought I was gonna barf. I was so scared doing this. I was like, oh my god, this is crazy. Because I got lucky and picked a bunch of NVIDIA stock, and I was like, oh my god,
Oh, there you go.
I can't believe
There
I'm
you-
gonna do this. Like, this
yeah.
is
Yeah.
crazy. But what I did, I rolled, like, I didn't have that much retirement money, guys. I'm not this, like, person that worked for tech and has like 300 to 400 grand in my retirement
Yeah.
account. Okay. But I rolled it into a product called a Solo K. I did this with a company called Directed. I researched a bunch of companies. I really love this company. It's one of the partners is Matt Sorensen. He is I think he's a tax attorney. incredibly intelligent gentleman, but the service is what I really like. What this allowed me to do, essentially, you can roll all your stuff together into a solo K product, and you can do all the same things. You can go and buy your Nvidia, you can buy your, mutual funds, you can do that, you can do crypto, you can lend money to other real estate investors, to other business investors, to funds. You want to invest in your friend's RV park fund? Cool. That's how you move that money, right?
Hmm.
Um,
Hmm.
and you're earning the returns. You
Hmm.
are earning returns the same way your retirement account normally typically grows,
Yeah.
with a caveat. With a caveat. You can borrow 50% of the total balance of this account and take it out for whatever the hell you want. And that is how I got my SBA down payment. So
Mm.
my down payment, I'm paying 9% on it, which like gross, right? But also it's
Yeah.
9% back into my retirement account.
Yeah, because with a traditional 401k, I know it's capped off at $50,000. Like that's the most you can borrow,
Yeah,
unless you're withdrawing it for like. There are some rules that allow you to buy it for use it for a house or something like that, and there's hardship withdrawals and different things like that. But I know from the loan side, it's $50,000. But in the solo K, it's just 50% of whatever the balance is. But you know what's great about this is there's a lot of people that have these type of accounts, um, self-directed IRAs, all kinds of different things
yes,
that are out there that invest that are looking for good investments. So
exactly.
I always tell people finding the money is easy. Like they can contact you and you guys can talk it through like here's some avenues you could possibly go to find some money. The key is finding the deal always,
For
right?
sure.
You have the deal, the money will always come. Just find the good deal. Find the good business that's in this building and have it all mapped out. You do
Yeah.
that, you don't have to worry about the money. The money's going to come to you.
And like everything else, right? It feels so impossible. Like, oh my God, I have to have all the stars aligned and Jupiter going to
Yeah.
Mars and rainbow farts everywhere. And it's like, I get it. It does sound like that. But this is like any other large, complex thing you've ever approached in your life. You literally accomplish it bite by bite. And where people get it twisted is they become inconsistent. They become inconsistent at looking, at calling brokers, at underwriting deals. They, you know, don't put as much importance on working the network and showing up, getting on podcasts, right? Getting out there, talking about what they want to do, getting in front of people, getting in rooms of people that have already done it. All of this is exhausting. It's not easy. I mean, I did all of this during the pandemic, pregnant with my third, like after a C-section on the phone, like, I made a lot of freaking sacrifices to do this. I kind of have this shtick on TikTok where it's like, buy a business from a boomer. I think you can too, right? And I do.
Yeah.
I legit do. I think anybody can roll up to their uncle's old HVAC company, walk down the street to the laundromat they've been going to for 30 years. Anybody can do this. But not everybody has that kind of energy, fortitude, or resilience to get through it. And that is the part that I like.
Yeah. Let's talk about real quick as we wind down. Where are you investing right now?
I own a car wash, the land and business in Arizona. So I'd love more car washes in Arizona. I've been able to figure out that model. I'd buy car washes anywhere in the Mountain West, honestly, somewhere that's not more than an hour or two flight away. Um, I
So
want,
the self-service car
yes,
washes or where there's
yes.
actually employees. Okay.
Yep, self-serve car wash. I do have a car wash, like I guess you could call him technician. And I just got really lucky on this one. I actually found it through another commercial broker friend. He previously owned 25 car washes in the market and sold his entire portfolio. And he's just an older man that just wants to fart around a car wash. So that's the guy that helps me. And it's a great deal for him. It's a great deal for me. Um, won't always find that unicorn, but I now know what it takes. And so I'm like, I like car washes. I don't like
Okay.
tunnel car washes. Those are a lot of parts, a lot of expense. Um, and
You're talking about just the ones that there's like maybe like several bays that you just drive in and you
that's
spray
it.
down your car and then you have a vacuum machine.
That's it. That's
Yeah.
it. And so the cool part about those, like the one I found was on a hard corner on the main drag in a dusty old town. And knowing what I know as a commercial retail broker, I can knock it down and I can ground lease that corner out. So I've got a contingency plan for if the car wash were a nightmare and I hate car washes all of a sudden, I wouldn't just sell it, right? Like I would try and make it do something else. I'm looking for more flooring companies in the Bay Area. So flooring cleaning, vertical to flooring, epoxy, polished concrete, something that does something different than we do, but
I
can,
think that's big is
right?
epoxy right now. Yeah.
And it's in my market. It's like I know flooring. I grew up in flooring. I freaking understand the trade. Like that's an easy one for me. And I do most of my retail development commercial broker work in Idaho. And I know the Idaho market better than any market. And so when I buy again, which will probably be late this year, I'm going to be looking at strip malls in Idaho. I'm going to be looking at pad sites that I know I can ground lease with a tenant in tow because that's what I do. I work with, burger users and gas stations and all of those places that exist in strip malls, whether they're local or national tenants. Um, and I mean, I've always dreamt of self storage, but it trades so high. Not
Yeah,
today.
that seems like it's just a fad to me. I mean, it's like everyone was so hyped about it.
Well, they
You
wrecked
know,
the market. I'll tell them that. Everything is trading for like a million over its worth. And now I've realized as a broker that it's actually now what people go and park their 1031 money in. Because the only way they cash flow is
mm,
if you come in with enough equity down. So if it's trading for over $1 million, let's say it's really worth 1.2 with its income, but it's going to trade for 2.2 because of how high in demand it is. Unless you come in with 1031 cash, you'll
yeah,
always run negative.
yeah,
So,
that makes sense.
it's one of those things you do when you have that killer killing of a gain, $1 million gain, and then you go buy a $2.5 million self-storage facility for 500. You know what I mean?
Yeah, 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 yeah,
Where there's a will, there's a way. But that's sort of
yeah.
what I'm looking to
Well,
continue.
you're tying up a lot of money though. That's
Hell
just,
yeah, you are,
and
right?
you're not gonna be able to get it out because how are you gonna really increase the value there?
It's right. So the boring commercial stuff is incremental value sometimes, right? And so unless you buy something with surplus land, increase value like that, put more
Hmm.
storage units on it, unless you know that it's the one guy in the market that's 50% below in cost, raise the
Hmm.
rents. Like, there's only so many things you can do here, which is why commercial feels scary. But once you understand that there's like 3 or 4 ways to do it, regardless of the asset class, you start to go, oh, I got
Yeah,
this.
yeah.
Yeah.
Awesome. Well, hey, I really did enjoy talking to you, and I've learned a lot. How can people find you? Like, plug yourself.
Yeah, yeah. So find me on Instagram at the Daniela Devine or find me on TikTok, the Daniela Devine. I do 15-minute free consults. If you have a burning question that you need some advice on, I do one-to-one consults. I'm going to have a static product, just general business buying for newbies coming out kind of soon here. Nothing crazy. I'm not building a community. And yeah, I do answer my DMs. So hit me up.
Okay. Okay. Well, you heard that. Daniela, thank you so much for breaking down everything in a practical way. Everyone out there, if you've got value from this episode, share it with another business owner or investor who needs to hear it. And always, we will see you on the next one. Everyone out there, God bless.